Well, thank you for being here, everyone. My name is Mike the CPA, and welcome back to Money and Life TV, the channel that people come to learn about finances, investing, and taxes. If you have come to check out this video, you are probably excited about the idea of building a feral, beast-like portfolio of dividend-producing assets to help support you in retirement. I also suspect you would like to achieve that goal as soon as possible because your boss at the job you no longer like going to is really starting to get on your nerves, let's be honest.
You see, we're putting the cover sheets on all TPS reports now before they go out. Did you see the memo about this?
Yeah, I have the memo right here. I just forgot.
So we know that dividends can be a great way to start replacing your income, but how do we do that for you as soon as possible? What's the best way? Well, I remember when I first started out investing for dividends, one of the first questions I had is, should I invest for dividends by purchasing ETFs, exchange traded funds, or should my focus be more on selecting individual company stocks that pay dividends? Which one's the right one? At this point in the video, I could probably transition this whole conversation
into trying to sell you a course on day trading.
But instead, we're gonna skip all that BS and I'm just gonna give you guys the answer straight up. And the answer is stocks. It's stocks. That's why in this video, I'm gonna be sharing 4 reasons that I have found why I feel stocks are superior when it comes to investing in dividends or building a dividend income portfolio. This doesn't mean that all investors should invest this way for dividends, but I'll explain my reasoning for this throughout the course of this video. Reason number 1 is payout predictability. One of the nice things about investing in dividend paying stocks is you will know exactly when your dividend payment will be received. Secondly, it's easier to estimate how much your dividend payment might be. And also you can more easily gauge the financial health of each individual company, which is really hard to do with an ETF. Just from some of the factors above, I think you can see how this makes budgeting a little easier, especially if you're retired or on the brink of retiring soon. By building a dividend portfolio that consists primarily of individual stocks, not only do I feel you're gonna have an overall safer income, but I also think you're going to have a more predictable income as well. Trying to do this with dividend-paying ETFs can be more challenging to predict dividend payouts because the ETFs typically are made up of 50 or 100 stocks or more. Some companies the ETFs hold can be low-quality companies who may cut their dividend payouts, and you might see a drop in your dividend income when you least expect it. The idea of picking individual stocks takes a bit more time, I'm not gonna lie, to figure out the right investments, but I have found that it's worth it if you don't mind the extra time commitment. And guys, just from my personal experience, especially if you're more of a cash flow investor, somebody who wants to invest for dividends, I have found it's not too much of a time commitment. Typically, I only spend now to do some research anywhere from 1 to 4 hours per month. So I don't think it's too large of a time commitment. And you're gonna become more and more efficient at it over time the more you do it. Now I know you're all freaking out about how much time it would take away from you playing Fortnite, but don't worry, that time will not be hindered. Reason number 2, stocks are easier to analyze. I've kind of already hinted at this in reason number 1. Personally, I feel stocks are easier to analyze than ETFs because you can look at the financials of each individual company one at a time. There are ways to analyze ETFs, but I feel from experience that I can do a much deeper company analysis with individual stocks. And believe it or not, my wife feels the exact same way when it comes to shopping for purses. If I'm out with her when she's shopping, she never likes to look at 100 purses all at once. No. She likes to carefully and slowly look at one purse at a time. For those of you who are married, you know exactly what I'm talking about. Reason number 3, fee, fi, fo, fum, investment fees. One of the things I love about buying individual company stocks is I only pay a fee one time when I buy it. I don't have to worry about reoccurring fees year after year after year. Now you're probably saying, well wait Mike, aren't ETFs low cost? Yes, but you might change your opinion about that here after we look at some numbers. Now I still think overall ETFs are low cost, but if you think of it this way, if you grow your account to $1 million, for example, And, you know, let's say you're looking at a Fidelity funds or Vanguard funds, and their fund fee is usually like 0.1%, 0.3%. So it's super small, right? At least, or so you think. Even with such a small fee on a portfolio of $1 million, that 0.1% or 0.3% can cost you anywhere from $1,000 to $3,000 per year in brokerage fees. And those are reoccurring. That keeps going every single year as your account grows. Now compare that to a platform that charges no commissions like Robinhood or M1 Finance, or even like Ameritrade, for example, which you guys know that's what I use, that charges $6.95 per stock transaction. Even if I invest 4 times per month or 12 times per year, I'm only paying about $333, regardless if my account is worth $1 million or not. I invest less frequently than that, so my annual commissions are typically only $200 or less per year. But remember, once you buy the stock and hold on to it, you never have to pay another fee again unless you sell that stock. Which means you can use all that extra money you're saving to fuel your gambling addiction. Or realistically, buy your wife a purse in advance so you don't have to go purse shopping with her. Hold on guys, just 1 second. Chipper, what's with all the purse jokes in this script? I mean, seriously, like, my wife, if she sees this thing, she's gonna think I'm super insensitive and that I actually don't like going purse shopping with her. You're gonna get me in a lot of trouble. What do you mean you didn't turn the camera off? Reason number 4, customization. Now, most of us like things that are customized, like customizing our character in Red Dead Redemption 2. So if we're customizing our character there, why can't we customize our dividend portfolio as well? When investing for dividends, by purchasing stocks, you are able to customize your portfolio the way you like it. You can purchase companies that pay dividends monthly, quarterly, annually, etc. You can diversify by industry and have more control of how diversified you want your portfolio to actually be. And also, you can customize your yield as well, which we're just about to talk about. I know earlier in the video I said I only have 4 reasons for you. I actually have 5. Reason number 5 is higher yields, one of the most important ones of all. Now, when it comes to yields and ETFs, when I think about it, I think the yields for most people are gonna be far too low to really benefit people's retirement needs or to meet people's retirement needs. In my opinion, it's going to take too much capital to have a safe income in retirement if your ETFs are only yielding you around 2%. In my experience, I have found that I think it's much easier for the average person to achieve this income or retirement goal with dividends by picking individual stocks rather than ETFs. Individual company stocks can provide much higher yields. Now personally, and I've mentioned this in another video, but I try to shoot for a minimum yield, an average minimum yield of at least 3 to 4%, maybe even 5 to 6% depending on the investment mix. But at a minimum, 3 to 4%. I think 2% is too low. I don't think I could do it or have success that way. Now, right at this moment, my current weighted average dividend yield in my portfolio is right around 3.5%. As you do this own research for yourself, I think what you're gonna find is that yes, picking individual stocks, doing a little bit of research, it takes more effort, a little bit more energy, but I think you're gonna find that it's well worth the additional time because the extra income and savings of what it can produce for you in retirement, I have found to be well worth it. Now, if you're watching this video, if you're still someone out there who you just cannot fathom or the idea of having to spend time to research individual companies makes you sick to your stomach, then by all means, ETFs are still a great choice. It's still, by investing in dividend paying ETFs, it's still gonna move your portfolio and your retirement income in the right direction. So don't beat yourself up if you don't wanna take the time to research individual stocks. ETFs can still be a great option for you. Now, if you wanna learn more about this particular topic, in the description section of the video, I'm gonna leave links to 2 awesome articles that go into great detail about this topic that we just discussed in this video. So make sure to check them out if you wanna learn more. And if you guys liked the video today, do me a huge favor and crush that like button if you enjoyed the video. Share this information with a friend, especially somebody who's thinking about dividend investing. And last but not least, if you are new to Money in Life TV, well, welcome to the channel. On this channel, our goal and mission is to help you become fiscally fit, and we do that by teaching finances, investing, and taxes. In the comment section, let me know what you guys think about this stuff, about investing in stocks for dividends or ETFs, or leave whatever questions you might have in the comment section down below. I love reading everything you guys have to say. All right, everybody, thank you so much for hanging out with me here on YouTube. I always feel honored to have you guys. I hope you have a great week, and I'll take this information and use it to live your life on Cage. I'll see you all in the next one. Stay chill, everybody, and I'll see you in the next episode. Peace.